Bismillahir Rahman Rahim. The next topic is what is accounting cycle, right? Accounting cycle simply can be defined in this way. The sequence of accounting procedures used to record, classify, summarize, and communicate accounting information is called what? Accounting cycle. Accounting cycle is the process, we can say. It is a process which starts from recording, and after that it go for classifying, and after that it go for summarizing, analyze and interpret, and finally communicate the accounting information to the users. So if you remember, basically this was the definition of accounting. So the whole definition of accounting, the whole procedures or a step which we have in the accounting cycle, simply that it can be called as accounting itself. So accounting cycle itself is the definition of accounting. Why? Because we said the same thing for definition of accounting, and it is the same with accounting cycle. Accounting cycle means the whole definition of accounting. Anything that you do in the accounting is basically part of accounting cycle. So what is accounting cycle? Accounting cycle is the definition of accounting, which starts from here. It is the sequence. It means several steps, which start from recording, classify, summarize, and finally communicate the accounting information to the users. Basically, these are the steps of accounting cycle. This one. It start from journal, then go for the ledger, then go for the trial balance, and then go for adjustment entries, and then go for adjusted trial balance, then financial statements, closing entry, and closing trial balance, right? Definitely, before to go for the journal, we have transactions. We have what? Transactions. Transactions are to be recorded in the journal. If we want to record the transactions in the journal, so this step simply can be called as recording. Can be called as what? As recording. So this step is called recording. After recording in the journal, the next step we have to transfer it to the ledger. This step simply can be called as classifying. Can be called as what? As classifying. Classifying, right? Classifying simply means transferring the data or the entry from journal to the ledger. After ledger, we have to go for the trial balance. And this step simply can be called as summarizing. Simply can be called as what? As summarizing. Right? Summarizing. Right? Summarizing. So this step is called what? Summarizing. And definitely after this, so we have to go for adjusting entries. We will study inshallah in the next videos what is adjustment entries. So after share balance, if there is adjusting entries, so you have to go for those adjusting entries as well. And after that, once again, you have to prepare the trial balance, and this time you have to prepare the trial balance after adjustment. But remember, if there is no adjusting entries, there is no for this one as well as there is no for this one. So this one can be called the finalize itself. And after this adjusted trial balance, the next step is we have to go for what? For financial statements. Also, we can call it as finalizing. We can call it as what? As finalizing. Finalizing. Why we can call it finalizing? Because we are making final accounts, right? So these are the steps. Transactions are recorded in the journal, right? This is called recording. After recording, it is classified into the ledgers. So we have to classify in the ledgers. So it means ledger is used for classifying and journal is used for recording. After classifying, we have to summarize it. Where we can summarize? We can summarize in the trial balance. And after that, there is adjustment. What is adjustment? We will study, but for the time being, let us say, for example, salary of an employee is 20,000, but you paid only 8,000. Remaining amount should be considered as adjustment. So at the end of there, you have to make adjustment for extra payments or less payments, or extra received or less received. After adjustments, once again, you have to prepare the trial balance. And after, when you prepare the trial balance, you have to make financial statements. And now we know how many types of financial statements we have. If you remember, 4 types of financial statements are discussed, right? The first one was income statement, and the second was balance sheet. The third one was cash flow statement, and the fourth one was owner equity statement. After this, you have to go for the closing trial balance, closing entries, and after that, you have to prepare the closing trial balance. So this step simply can be called as reporting. Can be called as what? Reporting, right? Report. Reporting is basically this step. It is not clear, but still we can say it. So transactions are recorded in the journal, recording. After that, classifying. After that, summarizing, analyze and interpret. Finally, financial statements and communicating the report. So these are basically the steps: journal, ledger, trial balance. If someone asks you what are the steps in the accounting cycle, you have to say journal, ledger, trial balance, financial statements, adjustment entries, then adjusted trial balance, then financial statements, then closing entries, and then closing trial balance. Also, you can show it in this proper format. The first step, journalizing transactions. After that, posting entries into the ledger accounts. After that, we have to prepare the trial balance. Then we have to make end of the year adjustments. Then we have to prepare adjusted trial balance, prepare financial statements, journalizing and posting closing entries, prepare after closing trial balance. So these are those 8 steps which we have discussed here. So this one was simply definition of accounting, right? Accounting.